All right, finally, this is the lesson that you've been waiting for this entire time, how to create your trading plan. That's what we're going to be digging into here. So I'm going to show you a template with various topics that you can include in your trading plan. And I've really been working a long time kind of putting this together. My trading plan has evolved dramatically from the time that I started trading in 2012 to where it is now. It started off literally as having maybe like 5 rules, 5 guidelines, 5 sentences of what to do or what not to do. Then it evolved to maybe 10 sentences of what to do or what not to do. Then it eventually evolved into having various strategies and those guidelines, then adding management techniques and all that stuff. So now this template that I'm going to show you, this layout, is really going to be a game changer for your trading, because what it will do for you is it will take all that knowledge that you have gathered, right? It will also take everything that you know about yourself. It will take everything that you have learned from your performance review, the insights, right, from your trading. It will also take into consideration your trader profile and your risk profile with that as well, right? And then we'll start adding everything together, right? From analysis to execution to management, right? And how to use discretion, which time frames, how do you evolve your trading plan, right? So it's going to be really, really comprehensive, but just know that this is kind of a workshop vibe, that I'm going to walk you through these various topics. I'm going to walk you through this trading plan, or this template of a trading plan, and then you're going to have to sit there and do your homework and actually fill it in based on your trading personality, based on your knowledge, based on what it is that you want to achieve. So, like I said, this is a game changer, and to actually get this going, I have to jump on the screen here and show you exactly what it looks like. So let's do that right now. What do you have here on the screen right now is a template of a day trading hybrid plan. And this is all the little sections that we're going to quickly walk through, right? So we're going to start off with trader profile, objective, investment size, goal, evolution, trading timeframes, markets, risk profile, trade management, execution, higher time frame analysis, lower time frame execution, scale and positions, discretion, review process, psychology plan. And you can even add something like an appendix to this as well. And you can change the names, add anything else that you think is relevant. But I think it's extremely important to have this kind of a breakdown of your trading plan, so that your rules, your guidelines, everything is categorized, and it's not just random. It's not just a list of 10 goals or 10 guidelines that you want to follow. This is actually what a plan looks like. So let's dive deeper into this, because every single part of this has a deeper section within it, right? So if we go to lower time frame execution as well as an example, again, it has a full breakdown within it. So I'm going to go section by section. I'll present this to you in a different layout, and I'll literally go section by section and talk about it. So let's do that right now. So here we go, the day trading hybrid plan. First thing I'll start off talking about is the trader profile. This is a summary of what your trading plan is, right? So you simply summarize, I'm a hybrid trader. With the conservative approach. I use 90% precision, 10% discretion. I prefer short-term management over long-term management. I focus on clean higher time frame directions, and I execute roughly 8 to 12 trades per month, right? So you literally summarize your trader personality. This is something that you can do at the end, right? So when you build your trading plan, at the end, you can take a few sections and just do dot points and summarize that trading plan for yourself, just so you can quickly be like, yep, this is what I do, right? So that's trader profile. Next section here that we have is the objective. This is important, right? The objective is extremely important, because the objective, what it tells you is the goal, specific goal for that trading plan. So what is my objective here? Reach consistency at a minimum average of 5% profit per month over a 6-month period. Right? So you might start off with that. You might start off with that trading plan, and you give yourself an objective, right? So this trading plan, by executing this trading plan, I want an average 5% profit per month over this 6-month period, right? Then when you do that, as an example, right, then you might want to refine your trading plan, make a version 2.0 instead of 1.0, right? And maybe the objective of the second version after 6 months will be to achieve an average of 10% profit per month over a 6-month period, as an example, So you can have a version 2 as you refine, do your performance analysis, right, on this trading plan, on your history over the last 6 months following the specific trading plan, right? So eventually you can do a performance analysis, make new insights, adjust, and set a new objective for your version 2.0 plan. So this is why I have the objective here, because it's nice to know what is my purpose, what am I intending with this trading plan, what do I want to achieve from this trading plan, right? And then later that can change when you make a version 2.0, version 3.0, and so on, right? So that's objective. Next section is investment size, right? So this is pretty much talking about how much you're looking to invest. What is your plan? How much capital are you putting in? So let me give you an example, right? Let's say you have 100 grand, right? So let's just say you have 100 grand, but you may not want to start trading with that 100 grand right away, right? So your investment size will simply say, I have $100,000 of worth of capital. That is my liquidity. That is my liquid cash, 100 grand, right? And I'm going to put 25% into crypto, 25% into equities, 25% into Forex, as an example. And you can put that within this investment size, within this investment section, right? Or you can be like, yeah, I have 100 grand. I'm a new trader, so I'm going to start off trading with $25,000. After 3 months, if I hit my objective within a 3-month period, then I'll add another 25. I'll continue for another 3 months. If everything's doing well, I'll add 50, right? And then I'm at 100 grand as an example, right? So you can make a plan for yourself of when are you going to add capital, or how are you going to redistribute that capital? What are you going to do with it, right? So that is this section, the investment size, or just simply investment plan, right? So you can approach it in a few different ways. So whatever works for you, make sure you do that. Now let's move on to the next one. The goal. I would say this is your personal goal, right? By following this trading plan over a 12-month period, I plan on this, right? Whatever it is. This is kind of like where you take section 1 or season 1, know yourself, right? And you take that goal that you create for yourself, the next lifestyle upgrade, right? And your goal is, hey, this is the trading plan. It's very optimized. It's very refined, right? So I'm going to execute it for the next 12 months. And my goal is that after that 12-month period of executing this trading plan, I'm going to be able to upgrade to this lifestyle. Or my goal might be something else, right? That all of a sudden I'm going to take my profits and create a passive investment portfolio. Whatever your goal is. I like to focus on personal and lifestyle goals here, right? Because that's motivation. So it's nice to have some motivation within your trading plan as well that is personalized for you. That's why I have this goal section for right there, where you can literally break it down. And you can break it down in so much depth that you can say pretty much, I have 100,000 grand. My lifestyle upgrade will cost me roughly 20,000 per month. So I have to be trading at a 5% average per month for a period of 12 months. And then it's going to compound to this specific number. And at that point, once I hit this number, I will be able to upgrade my lifestyle, right? I hope that makes sense. I just kind of went off the top of my head there, but that's kind of what I'm talking about. You can break down your goal into stages, into steps based on your investment size, right? And once you hit this specific number based on your objective, 5% average, based on a $100,000 account, investment size, after a certain of time, like 12 months or 24 months, I will be able to upgrade my lifestyle, right? So that's kind of your goal section. That's kind of how that can go. Let's move on to the next one, evolution. This is big, right? Let's read it out real quick because I actually have some points in here. So evolution. What evolution means is, at what time do you take this trading plan, this specific trading plan? You don't make any changes to it, but at what time do you evolve it slightly, right? So let me explain what that means. Evolution to me is increasing risk per trade. It's a very simple evolution, right? So we at Trading MasterClass, we start off trading with 1% risk, right? So any trade that we take, we only risk 1%, right? So let's just say you pick a day trading hybrid plan and it's doing really well. You're hitting your numbers, you're averaging your 5%, right? You're consistent, you've been doing this for 6 months now, right? Then you can make a small tweak. You literally do not have to make a massive tweak. You can make a small tweak and up your risk from 1% to 2%. And now instead of a 5% average, it becomes a 10% average. Now you cannot do this right away. It's important that you do not do this immediately. There's a process to it. So that's why I added this section, evolution. How do you evolve your trading plan? When do you evolve it from a 1% risk to 2% risk? Because that's a very simple tweak that you can do, and you don't have to change anything about your trading. You just simply risk 2% instead, right? So let's dig deeper into this. Step 1, hit an average of 5% per month over a 6-month period. So this is your objective, right? My objective is to average 5% per month over a 6-month period. Once I do that, then step 2. If you achieve step 1 and have a strike rate of around 55 to 60%, as an example, right? And an average reward risk ratio that is closer to 1.5 or 2%, at that point you can consider scaling up to 2% risk, right? Now this can differ from a day trader to a swing trader, right? A swing trader might have a higher reward risk ratio. A hybrid trader might also have a higher reward risk ratio than 1.5 to 2%. So you make a guideline for yourself, but you got to make sure that that guideline stays profitable, right? So what do I mean by that? You can have a strike rate of 30%, right? That's okay. You can have a strike rate of 30%. That's not a big deal. It doesn't mean that you're a bad trader, as long as your average reward to risk ratio is like 3% or 4% or 5%, right? So if you're constantly aiming for 5% profit, but you have a 30% strike rate, you will still be profitable. So if you can maintain that consistency of consistently maintaining profit over a 6-month period, even though your strike rate is 30%, but your reward risk ratio makes up for it. And because of that, you're in profit, you're consistent. Well, that can be your guideline. Simple, right? Or your guideline can be, 60% at 1.5 or 2% profit, average reward risk ratio, right? That's kind of where it can differ. So it can differ slightly, but either way, the goal here is to hit consistency over a certain period of time, right? In your monthly profit return, have a good strike rate and have a good reward risk ratio that gives you a consistent profit every single month, right? So metric number 1, consistency. Hit your goal 5% over a 6-month period. This is an example, right? Metric number 2, strike rate. Hit a goal with roughly 55 to 60% strike rate. Metric number 3, reward to risk ratio should be about 1.5% or greater. Now, if the strike rate drops, if your strike rate is 30% or 40%, then the average reward to risk ratio should be larger, should be 2% or 3% or 4% or 5%, right? And that can be achieved by swing trading, right? Or the hybrid lifestyle, hybrid personality. Even though you might be wrong more than 50% of the time, you can still scale up to 2% risk. That is the point of evolution. Evolution is figuring out, really being honest with yourself, right? Looking at your results at this point in time, and then deciding, once I hit these numbers, once I hit this consistency, once I hit this strike rate, once I have this reward risk ratio, and I can do it over a 6-month period, then I will take my risk from 1% to 2%. That's a very simple tweak. You don't have to change anything to your trading. You don't have to do anything different. Just risk 2%. So the beauty of this is to not do it too early. The beauty of this evolution plan is that you will only risk 2% when you're ready, right? And what decides that you're ready? Metrics, data, your performance. That's what decides when you're ready to step up from 1% risk to 2% risk. Hope that makes sense. That's the evolution. It's a very small tweak. There's nothing wrong with making risk in 2% per trade as long as you have a full plan to it and you're consistent, right? So this is kind of what a full plan would look like. Let's move on to the next section, trading timeframes, right? So this is a hybrid personality. So a hybrid personality mixes day trading and swing trading together. So we have higher timeframes, monthly, weekly, daily, used for predicting the daily direction and the overall long-term bias. We have the lower timeframes, 4 hour, 1 hour, 5 minute, used for executing the strategies when both higher timeframes and lower timeframes are in sync. So this is an example of a hybrid, day trading hybrid timeframe, right? Trading timeframes. If you're just a day trader, then your higher timeframe can just be the daily chart, and your lower timeframe is 4 hour, 1 hour, 5 minute. If you're just a swing trader, then monthly, weekly, daily can be your main target, your main timeframes. If you're an advanced swing trader, then it could be monthly, weekly, daily, and have a look at the 1 hour chart to execute the SBO, right? So trading timeframes, based on you decide that based on your trading personality, right? And then you can write a few points underneath. Next, markets, right? So this is where you decide and commit to the market, right? So which markets are you focusing on? Is this trading plan built for Forex? Is it built for equities? Is it built for crypto? Is it built for all of them, right? Maybe you're going to be executing the same trading plan on FX, equities, crypto, right? Maybe you're going to have two trading plans. Maybe you're going to execute a day trading hybrid on Forex and you're going to use a simple swing trader for equities, right? So you can kind of put that here. This plan is for day trading hybrid personality, trading the Forex market. When it comes to equities, link to this trading plan, right? That's kind of what it can be. So what markets are you trading and how you're approaching these markets with which trading personalities? Maybe you're just trading Forex and that's it, simple, right? So that's markets. Risk profile. So that's kind of what we were talking about in the previous lesson. Risk profile is extremely important, right? So you can start off with neutral risk, right? And then define it a little bit. What does that mean to you? What does it mean, right? Give yourself an example. Or conservative risk profile. So what does conservative risk profile mean to you? Give yourself an example. A conservative risk profile might be like, whenever I identify an added risk, such as a horizontal level or a trend line that is holding price against me that I have to immediately trade through, and whenever I find that added risk, I will look to eliminate it first, such as waiting for the break and retest of that risk, or waiting for the next strategy such as the CBO, whatever it is, right? Give yourself an example. Aggressive risk profile, same thing. Whenever I identify that there's an added risk, I want to make sure that I at least have 5 positive confluence factors. And if I do so, then I'm going to execute that position. That is your aggressive risk profile, right? So you can define a little bit however you want to execute on risk, right? From a conservative point of view, give yourself some points. If you're aggressive, again, give yourself some examples of how you would approach a situation. And if you're potentially trading and then you come across a new situation that you haven't experienced before, but it's related to risk, put it in here as an example, right? So that is your risk profile. Extremely important to know because it really changes the way how you approach your trading plan. Next, trade management. So obviously this is extremely important, right? How you're managing your positions. And here I have something new. I have key points, right? So I have trade management, key points, and then we have the management plan. Management 1, management 2. Now this is a day trading hybrid. So management 1 is short-term management 2 is short-term aggressive. So let me explain this a little bit further. The key points, we're going to see this quite often in the other points as well as we continue going through this trading plan. What the key points are, they're insights, they're little guidelines, they're the rules, right, that you come across on. So the key points are things that you find about through your performance review, right? There can be some guidelines I even speak about. These are some examples, right? So your key points are literally guidelines, they're your insights, they're your rules specific to management in this example, right? There's some of the rules that you want to follow, right? Specific to management. Or things to keep at the back of your mind, again, specific to management. That's what the key points are. They're like your principles, your guidelines, your rules, your insights, right? And then we go further into the actual management plans. So you pick, maybe you're a swing trader trading simply long-term management, right? Or maybe you're a swing trader only using short-term management. Or maybe you're a hybrid trader using both short-term management or short-term aggressive management. Maybe you're a day trader only using short-term aggressive management, right? But if you're using both, right? If you're using both, if you look at this example here, let's say this is a day trading hybrid plan as an example, right? So management one will be short-term management, whatever that means, right? You can go back to masterclass lessons if you need to define this a little bit further for yourself. What is actually short-term management is in those lessons. Or if you have a different management plan for yourself, again, put it in here and define it. Give yourself a point of how it's actually executed. But sometimes you might want to switch to management two, right? So if you want to switch to management two, you got to give yourself the example of when you would switch to management two. And what is management two? So management two could be like short-term aggressive, or management one could be long-term management, and management two can be short-term management. In this case, it's short-term management, and management two is short-term aggressive management, right? But the one thing that you can add to this is an if-then statement, such as, I will start off with management one. So every single time you take a hybrid position, you start off with management one, short-term management, right? If this happens, I will switch to management two. Whatever that this is, that's what you got to figure out for yourself, right? So if this happens, I'm moving on to management two. If I'm running a 6% profit, I'm moving to management two. If the 4-hour chart finishes a wave 4 pullback and starts a wave 5, I'm moving to management two. If whatever, if target number one is hit, I move to management two. Whatever the guideline is, give yourself something in between those two managements, right? Such as an if-then statement. If this happens, do this, which means if this happens, move on to management two, right? Define it for yourself. And then you're going to have a full picture. Again, no emotions, no discretion. When you do it in this fashion, literally there's no emotion, there's no discretion. It's fully mechanical. You start off with management one. If this happens, you move on to management two, period, right? And that's how you do it. So that's management, extremely powerful. Let's move on to execution, right? So this is how you execute the positions. Give yourself some key points, right? And then by execution, I mean entry order or market order. Are you placing an actual limit order or an entry order, or are you placing a live entry market order? How are you executing the positions? Some might choose, I will do everything through a market order. I will always execute live. Or some might say, I will always execute with an entry order. Others might do a mix. When it's an IBO or a CBO strategy, I will execute with an entry order. When it's an ABO or an ACB strategy, I will execute with a market order, right? There's a benefit to entry orders and there's a benefit to market orders, right? The benefit to entry orders is typically it's a higher reward to risk ratio. The benefit to market orders is that you're waiting for that extra confirmation for that live entry, right? So there's a benefit, there's a negative to both as well. Just like with various trading personalities, there's a benefit, there's a negative. Let's move on to the next one. Higher time frame analysis, right? So this is where we really step it up again, right? Higher time frame analysis. How do you do your higher time frame analysis? And the way I have it broken down again, so higher time frame analysis is monthly, weekly, daily in this case. Mainly used for analysis, predicting the daily direction entries will be executed on lower time frames. So you can give yourself a little point, right? And then you can give yourself your key points, your guidelines, your principles for looking at the higher time frames, right? So again, your insights, your principles, your guidelines, your rules of how you approach the higher time frames. What do you want to keep at the back of your mind? What have you learned? Some of the lessons, whatever, you put them within your key points. And then you structure your higher time frame analysis in a certain fashion, right? The way I structure my higher time frame analysis is focusing on the wave theory. So daily wave 1 is an ABO strategy. Daily wave 2 is a pullback. Daily wave 2 with higher time frame confluence, such as a weekly 50 EMA rejection, which would be like an IBOC on a higher time frame if you know the masterclass strategies. Daily wave 3, such as an IBO or CBO strategy. Daily wave 4, daily wave 5, CBO or ACB. Higher time frame discretionary, right? So I structure my higher time frame analysis in that fashion. And then I go further, right? So daily wave 1, this is the breakout wave, right? Note, previous trend, wave 5 must be completed for me to execute on a daily wave 1, right? And then I just do, what is my optimal target? This is your target range for a wave 1. That's how I have it laid out. This is my target range for a wave 1. So my optimal target for a wave 1 would be the weekly 50 EMA or 0.32. Safest target would be the daily 50 EMA. Maximum target would be, again, same as the optimal for this specific wave, right? Then for your wave 2, you do the same thing. What is one key characteristic of a wave 2? What is the note that I need to remember? And what is the target range for a wave 2? For this, you would probably use Fibonacci retracement. Same thing here, right? Same thing for wave 3. In this case, your target range is based on Fibonacci extension, as an example, and so on. So you can characterize or structure it in that fashion. You can also do it a little bit differently, such as, hey, I'm a swing trader, so I do not execute on a wave 2 run. So you put an X right there. As a swing trader, I do not execute on a wave 2 pullback and a wave 4 pullback. I don't execute on this, so I put an X, right? So that's kind of how you can structure your higher time frame analysis. And to me, what this tells me is it just gives me an idea. It gives me some kind of structure to the way I do things, right? And simply when I analyze my higher time frames, I can be like, yep, this is an ABO, so this is my target range, right? So if it hits this target level, I'm not taking any more positions. That's kind of how I view the higher time frame analysis. I do my normal analysis and then I figure out, is this a wave 1? Is this a wave 2? Is this a wave 3? Is this a wave 4? Is this a wave 5? Is this fully discretionary that doesn't fit any of the strategies in a higher time frame, right? I figure that out, and then I know based on that, what is my target levels? What is my target range? And then if it reaches that target level, I'm done. I'm not executing any more trades. That's what higher time frame analysis section is for me. So again, that is higher time frame analysis. Again, I try to keep it pretty straightforward, pretty simple, and I like to categorize it by using the wave theory to actually identify which phase of the market the daily chart is in, right? And then how far can I push that specific run, and I do that by figuring out what is the safest target, what is the most optimal target, what is the maximum target, and I use the EMAs for that, and I use Fibonacci retracement for that, and I use Fibonacci extension for that, based on, again, depending which wave we're in. So that is the higher time frame analysis. Higher time frame discretionary is just define it for yourself. What do you consider discretionary, and put that in there as well. Do the same structure, right? Now, lower time frame execution, right? This is where now we take it to the next level, right? You might simply change this. If you're a swing trader, it might just be swing execution, whatever it is. But this is a day trading hybrid, one of the most complex day trading plans, or just one of the most complex plans. So let's just keep it higher time frame analysis and lower time frame execution. So lower time frame execution follows the same structure. You got your time frames, 4 hour, 1 hour, 5 minute. That's where the execution happens. Those are the lower time frames. Then you put your note. What is the one note, the thing that you want to remember, right? Used for execution and management once a higher time frame rejection is present, right? So we start off with the higher time frame, and once you have a rejection and you can identify a wave or a strategy, then you move on to lower time frame execution as an example, right? Then you have your key points. These key points, just like the key points above and the management key points, these are your lower time frame, your execution guidelines, your principles, your rules, your insights that you come across, your lessons, right? So your key points is what you put in there, right? Specific to lower time frame execution, right? And yeah, go crazy with that. At the beginning, you might only have a point or two. Eventually, you might have 5 or 10, right? And keep it simple as well. But that is the key points. Now, the strategies. This is where that comes in, right? So this is a day trading plan. So a day trader trades ABOs on a lower time frame. It trades IBOs, CBOs, ACBs, and so on, right? So we define it a little bit more. This is the actual plan. This is the gold mine, right? This is where you really take your trader personality, and this is where you really structure it, identify it. This is the section, right? So let's break it down a little bit farther, right? So we have our key points, we know what we want to remember, and we go farther. So now we break down the strategy. So this is a lower time from ABO. A lower time from ABO catches a wave 1 on the 1 hour chart, right? So you can approach it the same way. What is your safest target? What is your optimal target? What is your maximum target for a daily wave 1? I mean, it's an ABO strategy on a daily chart, right? Same kind of thing. ABO strategy, but on a 1 hour chart. So you want to be specific here. So this is the advanced breakout. Note, wave 5 on the 1 hour chart should be finished, right? So this is something to remember. You can give yourself even an extra point here, such as key confluence factors, or mandatory confluence factors, right? And you can list them. An ABO needs this, right? And you can even go an extra step and you can put what is a major negative for an advanced breakout, something to remember, right? So you can go take this even a little bit more deeper if you want. I have a simplified version here because I know personally what an ABO is, right? I know for myself what that is. I don't need to define it, right? I've traded it so many times that I don't need to define it, right? I know what an ABO is. But you might want to put the major characteristics for yourself, or the major negatives as well for yourself, just so you can remember, just so you can have it here, right? But this is where we go farther. So what is the optimal entry, right? So the optimal entry for a market order, for an ABO, I mean, is a market order or a live entry, not an entry order, right? So an optimal entry is a market order on a pattern breakout, right? So if you know the strategy, you know what I'm talking about. It's a live entry on a breakout of a pattern using the 5-minute 50 EMA as the break, right? What is my optimal stop loss for an ABO? Clearly protected by the previous 1 hour lows or the 1 hour highs. What is my optimal target if it's a daily run, meaning daily wave 1, 3, or 5? Optimal target based on a daily wave, right? So optimal target if it's a run, wave 1, 3, 5. You go to this. So optimal target for a wave 1 is the weekly 50 EMA or 0.3 to Fibonacci, right? And then that's how you execute a lower time from ABO. You put your optimal target by using the daily wave. This is again an example of a day trading personality, right? A day trader will have a different optimal target on a run. It will not be based on a daily wave. An advanced day trader might also have a different target, and so on, right? So this is again what I mean. This is where it gets specific. What about optimal target if it's a daily wave 2 or a wave 4, meaning it's a pullback, 4-hour 50 EMA or 4-hour 0.3 to Fibonacci, right? So this is where I use lower time frame retracements for targets as an example. And what is my optimal management? So if it's a run on a daily chart, I will use management 1. If it's a pullback on a daily chart, I will use management 2. And this is where you go to your management section, right? So management 1 is short-term management, management 2 is short-term aggressive, right? So this is how you identify it, right? So this is literally where you take everything and start putting it together, right? So you take your trading personality, you take the management approach, you take the higher time frame analysis and the targets and so on, and you merge it together for each strategy. So I did it here as an example for the lower time frame ABO using the day trader hybrid plan, right? It might differ just for a day trader. It might differ for an advanced day trader. It might differ for a swing trader. Because for a swing trader, this will not be lower time from ABO, it will be higher time from ABO. And this is what I need, right? Or so on. So that's kind of that. You might be a swing trader an advanced swing trader, meaning that you don't execute with a lower time from ABO. The only execution you have is an SBO, right? An advanced swing trader, the only thing that they will have on their execution is the SBO criteria, and the targets are based on the higher time frames. Right, I hope that makes sense. Let's go further. This will be lower time from ABO, ABC. So do the same process for you. If it's an IBO on a lower time frame, what is my optimal entry? What is my optimal stop loss? What is my optimal target if it's a run on a daily chart? What is my optimal target if it's a pullback on a daily chart? And this again differs based on if you're a day trader or an advanced day trader. It differs, right? This is literally where the difference is, and we talked about it in the previous lesson. And you gotta identify that for yourself, right? And what is my optimal management for the IBO strategy? And then you move on to the CBO, same thing, complete breakout. You can give yourself some notes, the criteria required, some negative confluence factors that a CBO sometimes could have. And then again, you break down the criteria. What is the optimal entry for a CBO? What is the optimal stop loss? The optimal target if it's a daily run, the optimal target if it's a daily pullback. And again, it differs whether you're a day trader. It differs whether you're an advanced day trader. It differs whether you're a day trading hybrid, right? That's where the criteria differs, and this is where you put it all together and identify it for yourself, right? Now, I have something different here that you might notice for those of you who trade CBOs. 1 hour wave 3 and a CBO 1 hour wave 5. A CBO can be both. A CBO can be a 1 hour wave 3 or it can be a 1 hour wave 5. A lot of times if you know the guidelines of the CBO strategy, when the daily chart gives us like a big move, like a bullish engulfing on a daily chart, right? A lot of times that gives you an immediate breakout right through the 1 hour 50 and right through the 4 hour 50 with a wave 1 on a 1 hour chart. Then we have a wave 2 pullback to reject the 4 hour 50 and the 1 hour 50. And now the CBO is a wave 3, right? Other CBOs might take a little bit longer to develop, meaning that the daily chart decelerates, it gives you reversal candlestick, the 1 hour chart breaks out above the 1 hour 50, gives you that IBO, then the 1 hour chart does a wave 3 run, breaks the 4 hour 50 with a wave 3 run on a 1 hour chart, pulls back to the 4 hour 50, and then you're taking the wave 5 run, right? So this is why I did both, lower time from CBO with a wave 3, lower time from CBO with a wave 5. The reason why I think it's important to categorize it like that is because a wave 3 optimal target is different than a wave 5 optimal target, right? Same thing, wave 3 maximum target is different than a wave 5 maximum target. A wave 5 target is simply wave 3 safest target, right? So you know that based on the wave theory lesson within Trading MasterClass, and you can kind of figure that out by using the Fibonacci extension for the specific wave. But this is again why it's important to have a trading plan, and this is again where it really differs and how it differs, how a CBO can differ based on whether it's a wave 3 or wave 5, and how targets can differ in general based on your trading personality. This is again why it's so important to do this. And then again, lower time from ACB. So some of you might choose to only trade the IBO and the CBO. So then all you have is the IBO and the CBO here, right? That's it. Now, let's move on to the next one. And like I said, a swing trader might only have, an advanced swing trader might only have the SBO in here. A swing trader might only have the higher time frames in here. So higher time from IBO, higher time from CBO, and what is my guideline, right? And again, that's why it's important to pick your trading personality, and then this is how you make it mechanical. This is how you structure it. And I found this way to be very, very optimal. So let's move on. Next section, scale-ins, right? So this is such as where we now identify swing trading personality, right? A swing trading hybrid, because the swing trading hybrid utilizes scale-in positions. So what I mean by that, a swing trading hybrid executes a swing trade, right? So the execution section would be regarding the swing trade, right? For a swing trader hybrid. Doesn't matter whether it's advanced or a normal swing trader. This execution section would be specific to the swing trade, the initial trade. Then the scale-in section would pretty much say, well, once I execute that swing trade, I will execute it, I will scale in with a CBO, I will scale in with an IBO, I will scale in with an ACB. So then all you do is, again, you have your key points for scale-ins, you have some notes for scale-ins that you want to remember, and then you take the same guideline. So if you're a swing trader, right, this might say lower time from SBO. And this is all that it might be. It might be a lower time from SBO. And that's it for your execution, right? It might be a lower time from SBO, your guideline. And then your scale-in section would include the criteria and the guideline for a lower time from IBO, lower time from CBO, lower time from ACB. And then you define it. When this happens, I will scale into the position, right? And then put some key points for yourself. So this is, again, where you define your mainly the hybrid personality a little bit farther, right? Now let's move on to discretion. Discretion is important because sometimes you need to utilize discretion, right? So again, figure out for yourself, based on your trading plan and the trading personality that you choose, when is it okay to use a little bit of discretion, right? As a trader, as a hybrid trader, discretion might be allowed. As an example, this is just an example, as a hybrid trader, right? Whenever you're looking to catch the daily run, the hybrid position, right? You might want to utilize a little bit of discretion when entering a position. Maybe it doesn't look as perfect, maybe you didn't reject it fully, but you can protect your stop loss. So this is my discretion, right? So identify it for yourself. When is it okay for you to use discretion? When is it okay for you to bend the rules slightly, right? Maybe it's not. You might say, I'm fully 100% mechanical trader. I don't use any discretion. Or you might say, I'm 90% discretion. I'm 90% mechanical or 90% precision. So I will execute my plan with precision 90% of the times. And 10% of the time, I might bend the rules slightly, right? And this is when I will do it. So that's what you do for the discretion section. Let's move on to the next one. And this is one of the last sections, review process, right? So how do you review the data? How do you collect the data? What do you do? At what point in time do you do your review process? Do you do it weekly? Do you do it monthly? Do you do it quarterly? Do you do it every 6 months, right? What does your review process look like, right? This is kind of where you identify that process for yourself. Do you do it after every single position, right? Be specific and give yourself some points and guidelines. And lastly, psychology plan, right? It's extremely important to have some kind of a psychology plan for peak performance, right? And this is what this whole trading plan is designed for, you to be at peak performance, to eliminate emotional trading, to eliminate discretion, and to identify your trading personality and stick to it, right? With that comes being at peak performance. And peak performance to me means psychology, also being at peak performance within your mind, right? So your peak performance psychology plan might be every single morning at 6 a.m. I will wake up and do an hour worth of meditation. Here's all my book, or here's my book list. I will read one book a month, or I will do this to maintain peak performance. I will exercise. I will do this. I will do this combination, whatever it is, for your psychology plan, so that you stick to this trading personality, or so that you are at peak performance at all times, right? This is kind of where you can get creative with your psychology plan or your peak performance plan, whatever you want to call it. So you might give yourself a list of books to read during the 6-month period. Or you might tell yourself, I will meditate at 6 a.m. I will meditate also in the evening. And this is the type of meditation that I will do. I will get myself a trading coach, or some sort of a coach, accountability coach, whatever it is that you require to hit peak performance in your mind and in your trading. This is kind of where you want to get specific with that. So, and the last thing that you can do if you wanted to, and I don't have it here, but the last thing that you can do for yourself is you can give yourself like an appendix, right? So you can, at the bottom here, you can give yourself an appendix where you maybe attach some examples, or you attach the strategy guidelines of some examples, or you give yourself examples of your management approach. You can give yourself like an appendix at the bottom of your trading plan where you just add various documents that complement the trading plan, such as strategy criteria, management criteria, examples, and maybe a list of guidelines or rules or insights that you're not necessarily have within your trading plan, but you just want to include at the bottom so you have access to it, right? Get creative with it. But that is it. That is trading plan creation. As you see, it's pretty in depth, right? You can get very, very specific with it, and you can customize it for yourself. And this takes it way farther than just having a piece of paper like I did at the beginning with 5 rules. And then I moved on to 10 rules, like I said, right? This whole process, figuring out how to structure it, took me a long time to figure out, because I had to be very clear in my mind about my trading plan, my trading personality, and then figuring out exactly, well, if I were to make a mechanical, what would it look like? Because literally take me 2 years back, or 3 years back, or 5 years back, I would probably not be able to pull this off, right? With the knowledge that I had at that point in time. Because at that point in time, all I could do is a list of rules and guidelines, right? But now, because my trading, my knowledge is so advanced and it's so in depth, that I can get extremely precise, and hopefully this helps you with that as well. Because this to me is extreme precision, where it literally eliminates all emotional trading, because you create this mechanical plan for yourself, right? And this plan will be literally different if you're a day trader personality, if you're an advanced day trader, if you're a swing trader, if you're an advanced swing trader, if you're a hybrid day trader or a hybrid swing trader, if you're an investor or an active investor, right? You can do this type of trading plan for yourself, and it will literally be different for all those personalities. Even with this guideline, it will differ because of target placements and executions and all of that information that we kind of went through within this season already, season 3 trading plan creation. So guys, that is it. I'm going to wrap it up here because it's a long lesson again. It's a big season. I hope it all makes sense, and have fun. You got a lot of work to put this all together, because I gave you the guideline, I gave you the structure, I explained what everything is. I explained the trading personalities in the previous lesson. So now you got to take it all. You got to decide which personality you are, and think about it in your head, what it actually is, right? And then go through this section, go through this trading plan section by section, step by step, and building it based on your trading personality, with the targets, with the execution, and all of that information. So that is it. Hope you enjoy it. and have fun with this process. Take your time, don't rush it. You might find that the first 3 months you might still be fine-tuning it, but at some point you have to commit. And I'm gonna say this, I'm gonna finish off with this. When you build your trading plan and you look at it and you're finally like, yep, this is complete, execute it for at least 6 months, right? Because that is where consistency comes in. If you continually switch your trading plan because of FOMO, you notice that somebody in the community is using a hybrid approach and they made more money than you, and that's an emotional reaction. If you change your plan that frequently, it's the same as jumping from a trading style to trading style to trading style to trading style, because that is what you're doing. And if you're consistently jumping from one approach to another, you're not going to reach consistency that way. But if you follow this process and if you do approach your trading in this fashion, right? And then once you have it all laid out and you commit for at least 6 months, that is how you achieve consistency, because it's literally you doing the same thing over and over and over again, and you're letting the probabilities play out, right? You're letting your strike rate play out, you're letting your reward risk ratio play out, and the overall probability of your trading plan play out over the long term, right? And then over the long term, maybe 6 months from now, you might tweak it a little bit because of the new performance review that you've done. That is it. I can talk forever, but that is it. Hope you enjoyed this lesson. Hope you enjoyed this season. It's a big one. You have a lot of work to do, and enjoy the process. I will see you in the next season. Take care.